Good Wednesday morning. It is Wednesday, October 5th, and you are in the P.I.L.L Method Club. How to pay off mortgages and all your other debt in an average of 7 to 9 years. Oh my goodness, not 30 years to never. 7 to 9 years. How is that done? Because, folks, since 1934, that is 88 years ago, since 1934, we have been paying about 75% more interest than we need to because of amortization. And if you've never had a class on amortization and how to defeat it, and most of us have not, we are borrowing money without knowing the rules to the game. Now, we're told some things to do via what's called best practices. We're told some things to do, but I'm telling you right now, that those things that we've been told to do are not saving us enough money. They're there just so that we won't panic. But I'm telling you, you can cut your interest costs on these loans by about 75%. What does that mean? If you are, let's say we figure out that you're supposed to pay about $300,000 in interest on your loans, and by not changing your budget, by using the current amount of money that you're already making, what if you could find out that you can live well, I mean live an abundant life, and cut your interest cost by 2/3, meaning you could pay about $90,000 to $100,000 in interest instead of $300,000 in interest. Therefore, because you're paying a lot less interest, more of your money goes to principal, and then you could be out of debt in 7 to 9 years. Folks, we're talking about today. Those of you that are thinking about getting a mortgage. Listen, if you are thinking about getting a mortgage, put a number 1 in the chat. If you're thinking about refinancing, put a number 1 in the chat. We're going to be talking about today, the interest rates are very likely to go to 7%. And if you get a mortgage at 7% and you can afford the payment, the experts are saying, this is what the experts are saying, date the rate, meaning don't get fixated on the rate. The rates will drop, and when they do, refinance. We're going to show you what it means to refinance to a lower interest rate. And let me put my link at the top of the page here, ice10k.com. All right, ice10k.com. And then when you see that link, if you want to, when I start putting information on the chat, and I start putting information on the screen, as it were, you'll be able to see it by going to one of the 4 social media platforms we are simulcasting to right now. Right now, I can be seen on YouTube, Facebook, Twitter, and LinkedIn. So if you want to click on the link above and then find out where we are, you can click that link and where it says watch us live, or you can go to ice10kvideos.com. That will take you straight to YouTube. Now, once you get to these platforms, don't forget to, depending on which platform you're on, don't forget to follow. Don't forget to subscribe, like if you're on YouTube. Don't forget to comment and like the videos. When you do all these things, guess what? More people get to see this information. And listen, if you want to, come up on the stage and ask a question, maybe you were in a room another day, but you weren't able to ask a question about that particular topic. We are going to entertain all questions, whether it's about this topic or from a past topic. So if you want to get more information, come on up to the stage. Ask your question about finances, about lending, about getting mortgages, about setting it up. And Miss King, oh my goodness, she says, good morning, just received my book last night. Miss King, you got my book? Oh my gosh, let's put that on the screen, everybody. Miss King got my book. Thank you very much for reading the book. And please, if if you like the book, please give us a review. If you already have read the book, read and review, folks. Read and review the book. We need more reviews. Okay. So I think we're over 150 reviews right now, but read and review the book. Let the people know what you think about the book. All right. And listen, I want to go ahead and share this room right now, folks. Go ahead and get it out there. I've shared it. I believe, let's see here. I believe Goldfinger Accessories has shared it. Thank you very much. Let me check and see. All right, who shared the room so far? And go ahead and share the room, folks. And we're going to be, okay. Thank you, Miss King. Thank you for that. Listen, folks, if you want to know more about what we're talking about, listen, I believe today we have, what show is this? Tilly, do you know what show this is? I think it's 140. Let me look it up. Let me look it up and see which show, what episode this is. We're closing in on 1 year, folks. I think we've been doing this 10 months. All right. And this is great. So we're closing in on 1 year, and open up my YouTube on another tab here. And this is episode 145. Wow. Episode 145. All right. So Iman, thank you very much for being here on you're watching us on YouTube. Folks, go ahead and put in the chat where you're from, where are you listening to us from, or where are you watching us from? Go ahead and put it in the chat or in the comments. Where are you coming from today? Tell us what city you represent. Go ahead and put it in there, and we'll shout it out. All right, Goldfinger Accessories from the DMV. All right, listen, I was just in Dallas not too long ago. We're also in Houston before that. All right, Cedar, you're from Atlanta. All right, so great. Fantastic. Atlanta in the house. Great, great, great. And I'm going to say good morning to the folks on our watching us online. Good morning. All right. There we go. Exclamation point. There we go. How do you pronounce? I need to know how to pronounce your name. I need to know how to pronounce your name. Nancy from LA. Nancy, how did you? I'm kind of wondering how you found us. Did somebody recommend that you tune into the Pill Method show? Were we recommended, or did you just find us? Because someone that I know very well out there in LA is now following us. And I'm wondering, she just found us. All right, so folks, let me go ahead and get started today and show you what I'm talking about. I'm getting ready to put some information on the screen, and if you want to see it, if you want to see what we're talking about, I think you're going to like it. I'm going to put on, let's see, $200,000 because my system is set up for that at 7%. I'm going to show you what's going on here. All right. So let's put that on the screen. And if you want to see it, go to one of the four streaming platforms that I talked about. And let's go ahead and share. All right. And there we go. There it is. Okay, so we're going to be bringing up that screen, folks. And right now we have $200,000 in. Wait a second. What's going on? There we go. I don't know what happened. There it is. Okay, we got $200,000 in our amortization schedule at 7%. Let me show you what that payment is. All right, it's $1,330.60. I'm using this small number because our system is set up for that, but it really doesn't matter what the number is. It could be $500,000. It could be $750,000. It could be $1.5 million. Whatever the interest rate happens to be, what the experts are saying is that we should, when the interest rates drop, we need to refinance out of the higher interest rate into the lower interest rate. Now, if you've heard that, put a number 1 in the chat if you've heard what we're talking about. Okay, it's pronounced Toika. Thank you so much for that, Toika. And so if you want to know, listen, put a number 1 in the chat if you've heard that. Go ahead. If you're a real estate investor, if you are a residential home buyer, go ahead and get the higher interest rate if you can afford the payment, but date the rate. Don't get fixated on the rate. Then drop when the interest rates fall, getting better. Then what you could do is refinance out of it and do that. So now I'm going to show you that what we need to do, folks, is do the math. Without doing the math, you don't know what to do. I don't even know what to do. But I'm going to show you some basics here of what we should focus on, okay? So before we get started, I want to bring on another celebrity that is now following the P.I.L.L method and use the P.I.L.L method to pay off his mortgage in 4 years. And now, while we're playing that, I need you all to go ahead and share the room. But I want you to know that there are other people out there that you know that are using the P.I.L.L method and are getting great benefit out of it. P.I.L.L stands for prepayment of principal, isolating the principal amount, leverage, and liquidity. And if you're following any of the motivational speakers, the number 1 motivational speaker in the world right now, according to many, is Dr. Eric Thomas, E.T., the hip hop preacher. Let's hear from him right now before we jump in to our first example. My name is Don Daniel, founder of P.I.L.L Method International, and our team created the most powerful money management, wealth building, debt elimination system ever created. At our recent seminar in Nashville, Tennessee, the keynote speech was delivered by the number 1 motivational speaker in the world, Dr. Eric Thomas. E.T., as he's also known, mentioned he paid off his mortgage in 4 years using the P.I.L.L method. I invite you to watch and listen.
Listen to me, y'all. One of his mentees took us through one of their programs, and I paid off my mortgage. But guess what happened? My marriage went to a whole nother level. And you know why? Because my wife is a security freak. And even when I blew up, my wife would be like, oh, you blew up, but how long is you gonna keep making this kind of money? I was like, I don't know, forever. She's like, you sure? Because I'm gonna keep my license as a nurse just in case you don't. So when I paid the house off, my boy was like, you ain't gotta do that, you can do this. But when I paid the house off using that program, it took the stress level all the way down for my wife because we no longer had a mortgage. Does that make sense? That thing that was coming every month, that was getting on her nerves, we didn't have that no more. And so she was at rest.
Did you hear that? No mortgage, no stress. If you would like to become debt and mortgage free within an average of 7 to 9 years by cutting your interest costs by up to 75%, go to pillmethod.com and request a savings and earnings report today. You heard it, folks. If you want to know how to do this, get a savings and earnings report. You can know the month, day, and year you could be debt free and how much interest you could save. If you want to find out where that is, if you go to my link right above there, ice10k.com, there is another button there that says get a savings and earnings report. Click the button, ice10k.com. That's ICE, which stands for Interest Cancellation Expert, 10, the number 10, and the letter K.com. When you go there, click that button that says get a savings and earnings report. Follow all the instructions, fill out the financial form that pops up, and my staff will get to work on it right away. And then you can know the month, day, and year you could be debt free, and they'll fix you up with a consultation. So folks, do that. If you like what you hear in just a couple of seconds, then you want to do exactly that. Let's go ahead and jump right in, folks. Jump right in. And listen, at any time, folks, anytime, raise your hand, come to the stage, and ask your questions or make your comments. Right now, we have 10 people in here. All right, 10 people all together. Go ahead and share the room some more so other people can find out what's going on. I have a $200,000 mortgage at 7% for 30 years. That's 360 payments. The payment amount is $1,330.60. I'm going to show you what the bank wants. This is what you see when you close on this loan. Okay, $200,000 borrowed, principal borrowed, 200 grand. Okay, how much total interest does the bank want over 30 years? A total of $279,016. What? We're actually going to pay more in interest than the money that we borrow? $200,000 borrowed, but the bank wants us over 30 years to pay $279,000 in interest. Who wants to pay $279,000 interest on a $200,000 loan? Does anybody want to do that? Please put it in the chat. Yes or no. Do you want to pay that kind of interest? And besides that, that's not even 7%. I need you to look over here to the right. Total interest paid as a percentage of principal, 139.5%. You're paying back 139% of what you borrowed. Almost 140% of what you borrowed is going to be paid back in interest. So that'll be a total of $479,000 paid back. That's one house for you, one house for the bank. Anybody interested in buying a house for the bank while you're trying to buy a house for you and your family? I know I'm not. I don't want to buy a house for the bank. I just want to buy a house for me. So let's see how we can learn the basics of how to pay less interest. Now, I'm just showing you the basics here. If you want to know exactly what to do, it takes a computer program to take a look at all the permutations, all of the ways that you can pay down debt using every single penny in your budget by tracking it and effectively using the pennies that you're not spending to kill interest. We want to send the right amount of money to the penny, to the right loan, in the right month, on the right day of the month, to optimize your interest savings. So I'm just going to give you some basics on interest savings. This is by far not optimizing your savings, okay? So let's watch this. I need you all to focus in here for just a few seconds. All right, so here we go. We're getting down to payment number 1. And if you see this, if you can see this, if you're new to the room, go to the link up above and click on it and find how you can watch this live. All right. So payment number 1, look how much money goes to principal. $163.93. Look how much money goes to interest. $1,166.67. Out of the money that you pay, look at this. The payment is $1,330. Out of that money, only $163 goes to principal. Who wants to pay money like that? Let me do a little bit of math here so you can really see what's going on. And then I'm going to show you how now, as bad as this looks, as bad as this looks right now, so my job is to make it look bad. As bad as this looks, if you can afford it, you may not want to refinance out of this interest rate, and I'm going to show you why. All right, but watch this first. We're going to take a look at, I'm going to bring up on the screen my calculator. Okay, there it is. So I need to show you something. We've got an interest cost on the very first payment. Our interest cost is $1,166.67. If we divide that by our monthly payment. We're going to divide it by our monthly payment, $1,330.60 equals, look at that, 87%. In this payment, 87% of your money goes to interest. Let me break it down another way. Every dollar that is being applied to this mortgage right now, every dollar, 87 cents of that dollar is going to interest, while 13 cents of your dollar goes to pay down the loan. Oh my goodness. What kind of deal is that? Is this legal? Is that okay? Is that okay with you guys? That 87% of your dollar goes to interest. And we've been doing this since 1934. Has anybody ever pointed this out to you, how amortization actually works and how inefficient it is to pay back a loan? Now, we got into these 30-year loans to make it possible that we can have a payment we can afford. We can afford this payment. But my goodness, what kind of cost are we expected to pay just to have? Oh my goodness. But guess what, folks? Even though this amortization schedule is weighted very heavily on the side of the banks, it's only that way because we don't know how it works. Once we know how it works, we can completely reverse the effect of all of that interest being paid out, and we can literally save the same amount of money that the bank is charging. We can save at the same rate that the bank is charging us. If you want to know how you can save at the same rate the bank is charging you, put a number 9 in the chat. I need to see some number 9s in the chat. If you want to, and even online, if you want to know how to save this kind of money, about thousands of dollars in interest, if you want to know how that works, put a number 9 in the chat and I will show you. All right, here it is. All right, watch this, folks. All right, I'm going to go back here. I see the number 9s. We're getting ready to do what we have to do to show the truth of the matter. Okay. All right, here we go. Let's just say we're at payment number 1 and $163.93 goes to principal, $1,166.67 goes to interest. Let's say we pay that in January. If we take a look at this schedule, we can see the principal payments all the way down. Okay. If we take a look at this and I tell you that number 1 is in January, the amount of principal we pay in February is this. How much principal do we pay in February? $164.89. Here's my question to you. If you can see this, do you, hello, Belinda, hello, Jeremiah Sams we've got them watching us on YouTube. All right. If you're paying $164.89 in February, do you have to wait till February to give the bank that money? All right. You've already made January's payment and you can see February's principal payment. Do you have to wait till February to give the bank $164.89? All right. Listen, folks, we've got, how many shares do we have in here? We want to get some more people in. I'm going to share the room one more time. And I just shared the room. And so we can get up to 8 shares. Can we get up to about 10 or 15 shares to invite some more people in the room? Watch this. The answer is no. You do not have to wait to pay that money. In fact, if you have it, you can pay $164.89 to principal in the same month. So you make your regular mortgage payment. And if you have $164.89 sitting in your bank in a savings account making 1/10 of 1%, virtually no money, you could take $164.89 out of your savings account, apply it to this mortgage in January. All of this money would go to principal. And guess what? You're paid down to line 2 in 1 month, where you owe 199,671.18. So if you're paid down to line 2 in January, that means your next mortgage payment for February, next month, is actually on line 3 of the schedule, because you're already on line 2. What? Yeah, where you're going to pay $165.85 to principal and $1,164.75 to interest. So we just got rid of one line from our amortization schedule for $164.89. Line 2 is gone, eliminated. We just turned 360 monthly payments instantly into 359 monthly payments with just $164.89 we got from a savings account making 1/10 of 1%. How fantastic is that? And the interest cost on line 2, what happened to that? $1,165.71. Folks, you just eliminated that interest. How powerful is that? What? By prepaying $164.80. Listen, let's flip this around several different ways. How long would it take you to make $1,165.71 in interest from $164.89 in your bank account? How long would it take? It would take forever to produce that kind of interest. But if you take $164.89 out of your bank account and apply it to this mortgage, in the same month you make your first payment, it saves you $1,165.71 in interest you never have to pay. In fact, if you look at the overall amount of interest that the bank wants, we just showed you $279,000 in interest. We just reduced the overall amount of interest that the bank is looking for by a whopping $1,165.71 by prepaying $164.89. Is that powerful? Do you guys think that's powerful? Put a yes in the chat if what you just heard and seen is powerful. Oh my goodness. You can see this on a separate device by going to ice10kvideos.com. That will take you to our YouTube channel, ice10kvideos.com, or you can choose any one of 4 platforms to watch us on by clicking on our link up above, and it says see us live. Watch us live. See these numbers for yourself. Lena, how are you doing this morning? I see you. All right, go ahead. I see you, Miss Claudia. All right, and we got Brother Man in the house today. So folks, go ahead and keep sharing the room. We're up to 9 shares. Go ahead. Let's get up to 10 or 15. Invite some more people in the room. We're growing. We're growing by the minute. We have 13 now in the room. So watch this, folks. If we make our January payment, okay, and folks are saying, Don, look at the tiny principal payments and look at the huge interest payments. If you're making notes right now, I need you to write 2 things down. Okay, if you're taking notes, number 1, control the principal payment and you control the loan. Control the principal payments and you control the loan. Even I'm going to write it down. I'm going to write it down with you. Control, okay, the interest payments and you control the loan. There you go. All right, now look at the interest payments. Look how big they are. And here's the next thing you want to write down. Interest payments you skip don't matter. Interest payments you skip don't matter. All right? There you go. Interest payments you skip don't matter. Write that down too. Okay, so watch this. So If I make January's payment here, and I'm looking at the principal payments on line 2, line 3, and line 4, watch this. That's $164.89 I'm getting out of my savings account. I'm going to add to it another $165.85 out of my savings account. And I'm going to add to that $166.82 out of my savings account. Okay, let's give all three of these to the bank in January as well, on top of our regular payment. Guess what happens to these interest payments? 1165, 1164, and 1163.78. You never have to pay them. They've been canceled. Remember what I said. Interest payments you skip don't matter. We just skipped 3 interest payments by giving tiny amounts of principal ahead of time. That's how this thing is set up. Do you know this is why this is not taught in middle school? This is not taught in high school. This is not taught in college economic courses. This is not taught to real estate agents. This is not taught to people who provide loans for a living. Okay, if you are a loan officer, chances are you didn't know how this works because your employer didn't teach you how a loan actually works. And to get your license to be a loan officer, guess what? What I'm showing you right now is not part of the course. How in the world? How in the world? I got Miss Nancy up here. You know, she's a director. Okay, she understands cinematography. Okay, I have a $500,000 project. I have a low budget project, $500,000 project, and I want somebody behind the camera that knows what they're doing. Okay, I don't want somebody behind the camera that doesn't actually know how the camera operates. Is that right, Miss Nancy? Okay, you got to know something about how this is going to look when it's all said and done for my small budget project. But if I have a $500,000 loan on my mortgage or $1 million loan to buy my house, I'm getting it from someone who doesn't even understand how loans actually work. And we accept that. We've been accepting it for 88 years. Wow. Come on, folks. Look at this. So is this powerful? We get rid of all of this in January. That means my February payment is on line 5 of the schedule just because I gave ahead of time 3 small principal payments. Cut out the interest, cut out the payments, and now I have even fewer monthly payments. How about that? Is this powerful to you? Listen, I'm showing you what happens when you have these tiny principal payments. Remember, control the principal payment and you control the loan. I love these small principal payments. Why? Because if I'm going to put extra money on the debt to get rid of 1 line off my amortization schedule or 3 lines off my amortization schedule, do I want smaller principal payments or do I want larger principal payments? Do I want smaller or do I want larger? Wow. Watch this. I need you to see this. So now we're going to take a look at cumulative principal now and cumulative interest. This is why I love using this amortization calculator. This one is by Brett Whistle. His name is BRRRT. If somebody wants to put that in the chat for me, I'd appreciate it. BRRRT. And his last name is spelled W-H-I, S as in Sam, S as in Sam, E-L. BrettWhistle.net. Or you can Google Brett Whistle and you can get his amortization calculator. The reason why I like using Brett Whistle's amortization calculator for teaching purposes is because of cumulative principal and cumulative interest. The reason why we continue to pay mortgages and student loans and credit cards and auto loans the way we do is because we have no idea about how much interest we're consuming. That's what I call in my book, interest consumption. We have no idea how much we're consuming. And therefore, by not knowing how much we're consuming, folks, guess what? We continue to make the monthly payments and not know what's really going on. But if we can see, cumulative principal adds up all the principal payments for 1 year. We're just going to go down the line 12. All right. Cumulative principal. All right. All the principal payments for 12 months, if you add them up, comes to $2,031.55. So in 1 year, you pay this loan down by $2,031.55. But you also have to add up the interest payments for 1 month, for 1 year. They come to $13,935.65. Folks, let me ask you something. If you just created $2,031.55 worth, just created more space between what your building is worth, what your home is worth, and how much you owe. You owe $2,000 less. That means you created $2,000 worth of equity. Okay? But how much is the bank charging you for that equity? We have to pay attention to interest cost. And in 1 year, it's $13,935.65. Now, just for you folks that are in California, let me do this. All right. Because let's make it real. And then I'm going to come back to my let me see here. We're going to put Brett Whistle up here again. All right. We're going to put, okay, boom, at 7%. Okay. Calculate. All right. That's $1 million. Okay. $1 million at 7%. The payment is $6,653.02. Okay. Look at the principal payments, $819.69. Look at the interest payments, $5,833.33. So remember, I don't care about the interest costs because if I can skip them, because if I'm in California, I'm making more money, and so I can afford this if I'm making more money. So depending on the locale, so everything we're talking about is regional. Everything we're talking about is specific to the area you're living in. If you're living in a certain area and you want to buy a house, the things it just stands to reason you have to be making more money in that area. My folks, my clients that live in Bermuda, because of they have to ship in everything, you have to make a lot more money in Bermuda to live. I mean, a box of cereal costs $10. Okay. So it's all relative is what I'm trying to say here. But even at that, all I have to do is come up with an extra $824.47, and I get to kill $5,828.55 worth of interest. It's important to keep this in mind when we're doing what we're doing. So back to our $200,000. Now, here's what I want to ask you. In 1 year, we're going to pay this mortgage down by $2,031.55, correct? Correct. My question is, do we have to pay it in 12 monthly installments? I mean, $163 at a time. If we do it at $160 at a time, guess what? If we do it every month, we have to give the bank over $1,100 every single month. We want to wait at the beginning of the month to give the money. That is the bank's timing. If we do things the bank's way and do it according to their timing, we're going to pay on time every month. And by doing that, by paying on time every month, it costs us this much every month in interest. You know what I call this? I call this rent on your money. When you're paying interest on this money that you owe, that's rent on your money. You go from renting a house to renting money for our entire lives. How about that? Oh my goodness. Oh my goodness. Oh my goodness. So listen, if All right. If you are new to the room and you want to see these examples, listen, folks. Go to one of four social media outlets and watch us on YouTube, Facebook, Twitter, LinkedIn. And you can go to and you can just search Pill Method and it'll bring you to our live and you just click on watch us live. Okay, so now I just showed you by prepaying $2,031.55. If we prepay that, okay, we don't have to pay it in 12 monthly installments. If we have it, we can pay it all at one time on line one. How about that? Make our regular mortgage payment and then pay the remainder of the $2,031.55 going to principal. If we do that, we're paid down to here in 1 month. If I'm paid down to here in 1 month, that means my next mortgage payment is on line 13 for February. I just got rid of 11 months worth of mortgage payments I don't have to make. Guess what else I don't have to do? I just eliminated 11 interest payments I never have to make. Look at that. Look at all that money. 11 interest payments I never have to make because I took $2,031.55 out of my bank account, if I have it, and applied it. I just saved $12,779.81 in interest. So think about this, folks. If you invest $2,000 anywhere else, how long is it going to take you to make $12,779? But this is instant. This is assured. This is guaranteed. You take on this loan at this juncture, if you put $2,031.55 on principal, you instantly save $12,779.81 in interest to give the bank the same amount of money you'd have given them in a year. Isn't that amazing? What do you guys think of that? Any comments in the chat? Come up to the stage. Talk to us. Tell us what you think. Do you like it? Now, I want to show you what happens when we refinance to a lower interest rate, because this is what we're taught. As bad as I made this look, all right, it's also looking good. Why? Because of the small principal payments, we can make huge headway on this loan if we give the bank money in our timing. Follow the bank's timing, pay a lot of interest. Give the bank their money in your time, save a lot of interest. Get out of debt cheaper, which means you get out of debt faster using your current budget. Okay? Oh my goodness, oh my goodness, oh my goodness. So we just found out by prepaying this, we saved $12,700 and my next mortgage payment for February. Now you have a payment every single month. You don't skip out on the payments. All right. Let me see if I have any questions in the, okay, let me see here. All right. Okay. We got some guy here that's trying to get other people to follow him in my room. Okay. Don't do that. Okay. Get your own room. You want to sell something? Get your own room. Don't come in here to do that because you think I don't have time to teach and watch my room at the same time. Come on. Stop it. Okay. Get that out of there. All right, folks. So what happens when we lower the interest rate? Because this is what we're told. Doesn't it seem like the smart thing to do if we can drop the interest rate to 4 or 5%? We should refinance, because doesn't it seem like that would be the thing to do? It just seems natural, doesn't it? If somebody suggests that we lower the interest rate and we refinance out of this thing, it just seems like we would save money because we're going to be paying less interest per month. Doesn't that seem about right to you? Okay. No, it's Brett Whistle. WHISSEL. Brett Whistle. Okay. .net. All right. WHWHISSEL. Okay. All right. Thank you very much for putting that in the chat for me. Excellent. So here we go, folks. Let's go ahead, and I want to invite some other people into the room. All right, let me go ahead and hit this and invite some folks into the room. Let me see if we can get some other folks into the room to help me out this morning. And so, okay, look at that one. All right, and boom, we'll get that. Let's see. All right, there we go. And we're going to invite some more people in. All right. There we go. All right, I'm back. All right, so we just invited a few more people in. Do the same, folks. Go ahead and invite some people in. All right, we've got Miss Liza in here today. I'm going to invite her up to speak if she wants to. Miss Liza, thank you so much for being here. Dawn, what is going on? How are you doing?
Good morning. Life is good.
Life is good. Life is good. So, Dawn, we're going to actually show today if we get this, if we get an interest rate of 7%, should we lower it to 5? Should we lower it to 4? If we have the opportunity to go from like 7, from 7% to 6% to 5%, I'm going to put it in our actual program. All right, to show what actually happens when you do. All right. So now I'm going to pull up the same. We're going to pull up the same mortgage, duplicate the tab. Okay. We're going to pull it up and change the interest rate to 5%. Okay. And then we're going to take that out and get a new payment amount. So, the payment is actually smaller. Look at that. Look at that. Payment's actually smaller. We go from 1330 to 1073. If we take a look at the interest cost, total interest cost for 30 years, it's 186,000 versus 279,000. It looks like the 5% is better than the 7%. We're going to get into that in just a minute. But Miss Dawn, would you please introduce yourself to the folks and tell them who you are and what you do?
Sure. Hello, everyone. My name is Dawn Robinson, the Money PhD. I am a financial educator, and your new BFF, best financial friend. I am a single mom as a teenager, turned millionaire by age 44, and I always say that's my highlight reel. Right. So, but I did not achieve that without making many money mistakes. I got a bad boss. I was in corporate. Well, I'm still in corporate. And was big, fat, and happy. Thought I had done it all right. Right. 401k, savings account, and rental property. Got a bad boss. I always say I wanted to tell her she was number one with a different finger, and couldn't afford to quit. Realized I was $140,000 in consumer debt, paid it off in 17 months, and moved to Hawaii, right? Just because I wanted to do something different for a little bit. But my real goal now is to help other women, professional women over 40, start late and finish rich, because most of us make good money. We just don't know how to keep it. And we don't even know where to start at times, and secretly are struggling. So I believe that we're not financially free until work becomes optional. And this is why I'm here. So happy to be here, Dawn. Thank you.
And thank you, Dawn. Liza, how are you doing this morning? Can you speak with us this morning? Or are you working?
Hi, everyone. Grand Rising. I'm actually on the road. I have an appointment at 9:10. I haven't really done too much speaking on here, so thank you so much, Don, for bringing me on. Just a quick thank you, just for sending me your book. I really appreciate it. Dawn, I've heard you speak before, and I love to connect with you. I'm a realtor in Pennsylvania right now. I'm originally from New York, so I'm just basically starting like new territory in Pennsylvania. I like to specialize in like multi-units. We also have a lot of lands, farm, barns. We also have a lot of properties here that have like the commercial or retail space underneath and like residential on top. I also have a business partner that does fix and flips. So I'm just here really just to listen, learn, and see if I can connect and we can do business together. I'm definitely going to incorporate Don's book with my clients. I just think that that really is the key to, home ownership is, paying down that mortgage. I know a family member that's done that before, and that's the real freedom there. So just thank you so much for inviting me up here. And I'm just here to learn and listen, and just really hope to, meet awesome people that we can connect and build with. So thank you so much.
Oh, Liza, thank you so much for being here today. And thank you for saying such nice things about my book. Folks, you want to get that book. Let's go ahead and put that on the screen. Get the book and then share it with family and friends. Share this knowledge of how interest cancellation actually works and how you don't have to pay all of that money. And when you understand it, you will do some things differently than what we've been taught to do, because what we've been taught to do, we have not been given the numbers. All right. And I'm going to show you how these numbers affect these loans. So don't accept any advice from people who cannot show you the numbers, meaning what's the result? What's going to be the overall cost of me doing this particular thing as opposed to this particular thing? So when they give you advice, but they don't give you numbers, yeah, you need to take a look at that. If it's financial, you said, listen, give me the evidence. What's the evidence of what you're saying is true? Make them prove it to you. Okay. All right. Thank you so much. Let's get back to the screen and go ahead and continue. We're up to, ooh, man, people are coming in now. We're up to 20 people in the room. Go ahead and keep sharing the room. We're up to 9 shares. Can I get up to 15 shares? Is that possible? Can we get to 15 shares? Because if you do that, I think we can get up to 30 people in the room so that they can see this information as well. Now, watch this. We're looking at the same $200,000 loan, and we're switching it from 7%. We're switching it to 5%. I need you to take a look at the principal payment and the interest payments. Do you see the principal payment? $241. Now I have to come up with to save money instead of $164. What? I can attack this loan with $164 payments, 165, 166. But when I lower the interest rate, look what happens. 241, 242. When I keep the higher interest rate, I can prepay $2,031 and knock off 12 payments. What does $2,031 do at the lower interest rate? Not even 9 payments, just 8 instead of 12 with the same amount of money. So if you have some money available, so you want the right interest rate for you, not the absolute lowest, not the absolute highest, but I can almost guarantee you, if you have a 30-year loan, if you are a home buyer, okay, if you're a home buyer, and you can afford the payment, the absolute lowest interest rate available, I can guarantee you don't want that one. You want something that's going to fit your budget, meaning what monies do I have to work with and how can I eliminate interest? There's a lot of math that goes on here, folks, to figure out what is the right interest rate for you so that you can control the principal payment. Remember what I said, control the principal payment, you control the loan. And interest payments you skip don't matter. Oh man, I've got 11 people, I've got 11 shares, and I got more people in here right now. So if you want to, if you're new to the room and you want to see what's going on, click on the link above and you'll be able to see the button that says watch us live. You can go to watch us live on a number of different platforms: YouTube, Facebook, Twitter, LinkedIn. Or you can go straight to those on a different device. You can go straight to one of those and then search P.I.L.L Method. And then you'll find our live so that you can watch these examples. So here's what I'm talking about, folks. So now it takes $2,900 to knock off 1 year. All right. But Donna says, look at the interest payments. They're so much smaller. So won't it equal out in the end? Won't it equal out in the end? I don't know. It depends on how much you can bring the interest rate down. Because sometimes, Dawn, sometimes it will pay us to refinance to a lower interest rate, but most times it will not. But how would we know the difference if we don't do the math ahead of time? And I'm talking about some serious math here, okay? I'm talking about some serious math. Somebody online is asking a question. Let's put their question on here, okay? Somebody online is asking a question, and they're saying, I will be closing on my new home tomorrow. In order to follow this model, is there something I need to ask my lender to give me? My payment schedule does not look quite like your example. And there's a good reason for that, because the payment schedule they're going to give you does not include cumulative principal and cumulative interest. They will not give you that. Okay. So what you need to do, Aubrey, this is just basic information. If you want to know the month, day, and year you could be debt free on your new mortgage you're closing on tomorrow, then go to, let's put that in, I'm going to put that in the comment section, ICE 10K, okay? Okay, ICE 10K.com. There we go. Okay, go to ice10k.com and you'll see a button there that says get a savings and earnings report. Plug your information in there, and then we will do all the work for you. Tell you exactly how much money to move, what month to move it in, what day of the month to move it on, to be able to pay off that brand new mortgage of yours in an average of 7 to 9 years instead of 30 years to never. Wow. Okay. So if you, I hope this helps. Okay. All right. And assist. What I had was it didn't connect to Facebook for some reason. All right. All right. Aubrey said, thank you. They got it. Great. All right. Let's put this out again. ICE 10K.com and see if we can get it to go out to Facebook as well and the other platforms. There we go. We got it. We got it that time. All right, folks, watch this. So we're back on the screen now. We're back on the screen. And we've been here almost an hour. We're going to reset the room. Okay. And so we've just looked at all the money it takes to pay down the loan. Remember, control the principal payment. You control the loan. And the smaller principal payments can often work a lot better for us than these larger ones and the smaller interest payments. Let's see if it equals out at all for us. I'm going to bring up my program here. Okay. You want to see this. Okay. We're going to bring up my program. All right. And we're going to put in, I'm going to, all right, change the mortgage here to 7%. Okay. We're going to change it to 7. Okay. 300. Okay. We're going to change it to $200,000. Okay. And then we have to take a look. We have to change our payment. So our payment for 7% interest is $1,330.60. $1,330.60. So we'll change the payment here to $1,330.60. All right, and save that. All right, now John and Rebecca Jones. Okay, if this is their mortgage, they're going to be done in 8.1 years and save $213,803 in interest. That's our focus. How much interest can we save? Now, John and Rebecca they don't have just a mortgage. They've got an auto loan and they got a Visa, and they have this $200,000 mortgage at 7%. So, but the experts are telling us if the experts are telling us we can lower the interest rate, when the interest rates fall, we can do better. I have a 7% interest rate here. Derek just came into the room. Derek, how are you, sir? And I hope you're available to come up and speak. I mean, his program is phenomenal. Okay. Housing the homeless. Okay. Derek, how you doing, sir?
Hey, I'm doing good, man. How you guys doing? Good morning. Good morning.
Good morning. Good morning. Good morning. Listen, man, we're talking about 7% interest rates because they're going to go to 7. But the prevailing wisdom is when the interest rates drop, we should refinance out of these 7% loans and get the lower interest rates. It sounds reasonable, doesn't it?
And I'm sure you're here to tell us all about it, Don. So that's why I'm here to support and learn. Because, hey, as you say, it sounds reasonable, but I'm sure you got a better way, and that's why we're here.
It sounds reasonable. All right, folks. Now, I need you to take a look at this. So we're going to be out of debt. I can tell you from this date, they're going to be paid off. They'll be making their last payment on September. Let's see, September 6th, 2030. Okay, 2030. All right, 8.1 years from now, totally debt free, without changing their budget. Okay, now and we're saving $213,000. So what the experts are saying, I want to show you something. What happens? Remember, when we lower the interest rate, we increase the principal payment. Let's see what happens when we do. We're at 8.1 years. So I'm going to now, if we're going to refinance this thing, if we refinance it, there's a cost to refinancing. It's somewhere between $8,000 and $10,000. So if we refinance this thing, we have to add another $10,000 to it, don't we? First of all, let's refinance it without adding the $10,000. We're going to just change it to 6%. Okay. I'm going to go in here, change this to 6%, see what happens. We're going to change it to 6. All right. Now I need you to remember, we're going to be out of debt in 8.1 years, right? 8.1 years. And here is the date. Write it down. September 6th, 2030. September 6th. I got that written down. So we're going to change that. So now our new payment is $11.99.10. Wow, look at that. It's cheaper at 6%. So we're going to save this and see what happens to our numbers. We're at 8.1, and we're going to look at there. It dropped to 7.7. All right, but we're going to be out in, let's see, 5 months sooner. I got to refinance to get out of debt 5 months sooner, but it does go from 8.1 to 7.7. All right, now let's put in the $10,000 that it will actually cost to refinance this thing.
Oh, Dawn, that's good.
You like that, Dawn?
Oh, Dawn, that's good.
So I'm going to change this now. I'm going to change it to, we're going to edit this. We're going to put in the $10,000 it costs to do this and see what difference that makes. So now I got to find out. I got to do and find what is the, okay, $200,000, 210,000. Okay, come on down, get it right. Okay, 210,000 at 6%. All right, calculate that. Now my payment is $1259.06. $1259.06. So let me go ahead and put in the $1259.06, $1259.06. Because don't forget, generally we roll in the fee and don't pay for refinances out of pocket. So here's your new payment, $1259.06. Okay. And then we're going to save that. And we started out at 8.1. And when we refinance, what? Dawn, we lowered the interest rate. We put in the $10,000. Now it's going to take us 8.2.
You know, I'm gonna have to watch this again because I was like, oh, that was magic. Because I was like, you didn't include the closing costs, and you was like, well, we're gonna add in the closing costs.
Wow. Now that is just lowering it by 1 point. Okay. What if we now listen? They said, well, Don, what if we could get it to 5%? We'll go from 7 to 5. They're still going to, they're still going to charge us about $10,000. Let's do it at 5% and see what I see. Kevin in the room. Kevin, how you doing, my friend? How's everything? Listen, folks, if you want to know anything about what we're doing, please raise your hand. All right. Kevin wants to come to the stage. All right. And let's get him up here. Oh, he says he was just waving. Okay, I get it, Kevin. He's a teacher. I forget that. But sometimes they listen in the background. I appreciate that for you coming to the room and listening to us this morning. All right, folks, here's what we're going to do. I'm going to put it, we're going to lower it, not from, so we just saw by lowering the interest rate, okay, by lowering the interest rate, it's actually going to take us longer to pay, not by much, but you would think there would be a bigger difference than that, and it would be to the positive. We started out at 8.1. Okay, we started out at 8.1, and now we're at 8.2 by lowering the interest rate. All right, let's. I see. Did I see Tiny Home Plug in here somewhere? I thought he was. He was in here for a second. I guess he left. All right, so now let's lower the interest rate again. Okay. We just lowered it once. We're going to lower it again. Let's find our mortgage. We're going to edit this. And we're going to lower it to 5 this time. Okay? Because Dawn, the thing is, if we keep lowering it enough, the fact that we're paying less and less interest, it will benefit us in the long run if we can lower it enough. But that's the case. But we won't know the difference unless we do all of the math involved. So let's go ahead and change this to 5%. Okay, changing it to 5. And now we have to figure out what it costs, what the new payment is at 5%. Figure this out. That's why I love Brett Whistle, because I can do this on the fly. Okay, the new payment is $1127.33. $1127.33. So we put that in. Oh, look at, we're just lowering that payment. $1127.33. All right. And we're going to save that. We started at 8.1, then we went to 8.2. And now if we can lower it to even down to 5% instead of the 7, let's recalculate that. Program is recalculated. It's thinking hard. It's thinking hard. All right, come on. There it is. Let's see what it. Okay, we go from 8.1 to 7.8. Dawn, I'm going to go through all the trouble, refinancing, pay $10,000 just to get out of debt in 7.8 years instead of 8.1.
Yep. And that's why knowing the math and how to run the numbers makes sense. That's why it's worth it every time.
Listen, when somebody tells you something and they don't have a tool to run the numbers, folks, we're shooting in the dark. So tell me, to you, anybody here, is it worth it to you to take your $10,000, refinance your loan, even at the same number of payments? Now, we kept the same number of payments. So, but you can get out of debt instead of 8.1, you can now get out of debt in 7.8. Is it worth it for you to take your $10,000 because you're borrowing it? You're borrowing $10,000, but you got to pay that back. Okay. So you got to pay back the first $10,000 before you get back to your original balance because you added $10,000 to the loan. So
and
now
the schedule starts all over again.
Schedule starts all over again. All right. So now so if we do this, guess what? Is it worth it to you? Is it worth it to you to go from 8.1 to 7.8 and it's going to cost you $10,000? Let me show you what else is going on with this $10,000. The reason why we don't at 5%, I'm going to show you why it doesn't make that much difference because of what happens in the beginning of this loan. Watch this. Remember, we just added $10,000 in closing costs, right? So do we not have to pay back the first $10,000, Dawn?
Right. You got to pay it back. And I think that's what people are missing because it looks invisible to them.
Yep. Derek, do we have to pay back that first $10,000 just to get back to the $200,000 we refinanced just to get that lower interest rate? Derek, oh man, I love this. Watch. So now we're paying back the $10,000 we borrowed. Listen, folks, when you refinance and you roll in the closing costs, what you're really doing is borrowing an additional $10,000, but they don't call it borrowing. They call it rolling in, so it doesn't sound bad. I'm going to roll in the money. We're going to roll that in. And the reason why we're going to roll that in, Mr. and Mrs. Jones, is because we don't want you to take money out of your pocket to pay for this. We're just going to roll it in. And it's only going to raise your payment by $2, $3, $4. That's it. Just raise your payments by $2, $3, $4. We'll roll it in. You don't have to take the money out of your pocket. You get a lower mortgage payment. Whoa! We jump on that with 2 feet. Okay. We're going to go from 7% down to 5%. We're going to lower that payment all the way down to $1,127.33. Okay. Instead of the original payment we had at 7%. Okay. We have $1,330.60. We're adding $10,000 more to this. We go from $1,330.60 down to $1,127.33. Look at that. We're saving money. We're saving money. All right. Even though I added 10,000, but I lowered the interest rate. Watch what happens when we pay back the first $10,000. This is why I love Brett Whistle. Do you see here? We got cumulative principal and cumulative interest. I don't have to do a whole lot of math. I can see in 1 year how much principal have we paid down. $3,098.31. But that's not from the original principal, folks. That's $3,000 of the $10,000 I added to the loan. I'm trying to get back down to the $200,000 where I was before I refinanced. So I've only paid back $3,098.31. How much interest have I paid on $3,098.31? $10,429.65, Derek. Oh, listen, has anybody at the bank, as many people are in here right now, have you ever refinanced a mortgage? Put a number 1 in the chat. If you've ever refinanced a mortgage, put a number 1 in the chat right now. Put it in there. Okay? Come on. Put it in there. Yes, we've refinanced. Derek says I've refinanced. Goldfinger says I've refinanced. Dawn, what do you got to say?
No, I was saying I've refinanced before until I learned that there's a better way.
Okay, so everybody's refinanced. So as you're refinancing, has anybody ever showed you this? Okay, if no one has ever showed you this, if you put a number 1 in the chat, if nobody has ever showed you this, go ahead and put an N for no in the chat. Put an N for no. So they've never even showed us this before, how much it's actually costing. Somebody says, I'll put a bunch of no's, put a bunch of N's in there. No, they haven't showed us this. So for the first, listen, Dawn, what I'm showing here is if you went to your credit union and borrowed $3,000, because we're paying back the $10,000 that we owe. If you borrowed $3,098.31 for 1 year, okay, and they get to call it, guess what? They get to call it 5%. They get to call it 5%. But you borrowed $3,098.31 and pay it back in 1 year. And the credit union says, all we want to charge you is $10,429.65. Would you sign up for that loan, folks? At your credit union? Come on. But we do this in a mortgage and nobody is there to tell us. Nobody's there to tell us. Come on, somebody mod Miss Coffee Brown. I saw that she just came into the room. All right, I'm in the chat. I'm looking at this. Miss Coffee Brown, how are you this morning?
I came in a preaching moment. I was like, all right, amen. I don't know what Don said, but amen. Good morning, Don. How are you?
I'm doing fine, Miss Coffee Brown. I'm doing fine. Listen, we're talking about these higher interest rates and we get into it. And then the bank wants us to refinance to a lower interest rate. We just showed a 7% interest rate. We lower the interest rate by 1 point down to 6. Pay a $10,000 closing cost. It actually takes us a little bit longer to get out of debt than we were before by lowering the interest rate. Oh, Miss Coffee. Oh, I get so excited.
Don. Lord, you're starting early, huh, Don?
Yeah, I can't help myself. I can't help it. The people deserve to know, Miss Coffee. The people deserve to know. They deserve to know.
You got to give the people what they want, Don.
Yes.
You got to do that.
Well, listen. Here's I have this written in my biography here in my bio on Clubhouse. We answer questions about finance people don't even know to ask. So some people don't even know that they need it. They've been taught this their entire lives. When the interest rates drop, it is better to refinance and get that lower interest rate. Miss Laurel Long says, listen, she says, astonishing. They are robbing us with our eyes wide open.
But you know what, Don?
I'm sorry. Wait a second. I mispronounced her name. It's Laurel. Laurel, thank you so much for that. Thank you so much for that. All right, go ahead, Dawn.
No, that was me, Coffee.
Okay, go ahead, Coffee.
On a serious note,
yes,
it is our responsibility to do the research and do the legwork because, people have fed us information for years. We get fed information at church, we get fed information at school, at work, and all these other different places. And we take it as gospel truth, and we don't take the initiative to go and seek out for ourselves. So everybody in here is seeking for something. They're seeking for something, and it's just a matter of having our hearts open and our minds receptive and knowing that when somebody gives you something or they offer you something, it does not mean you have to accept it, especially when it comes to finance. And Don, it wasn't until I got in this room when you were talking about refinancing that the light bulb went off. Like you were like, don't ever refinance. That's putting you back from all the time that you've put into that property, all the money you've invested. You've been doing it 7, 8, 9, 10 years. You refinance, starting all over.
Oops.
So, just the wisdom that you have been able to share with us, it's important for us to seek out wisdom, knowledge, and understanding. Nobody owes us anything, but we owe ourselves everything. So when people come in here, they need to know that this is the place where they can obtain the wisdom, knowledge, and understanding to make well-informed business decisions. So thank you, Don, for curating these conversations and having this incredible mansion called it's just groundbreaking and life transformative. So thank you so much, Don. I yield my mic.
You are so welcome. Coffee, I want you to introduce yourself, but Derek, I need you to be on deck. I know you're busy, but if you, after Coffee Brown goes, if you could introduce yourself as well and tell the folks what you do, that would be wonderful. Miss Coffee Brown, who are you? Tell the folks who you are and what you do.
Thank you so much, Don. Who I am as a child of God, what I do is whatever it takes to win, whatever it takes to win. Anything that it takes to win, I do that. The focal point right now is on helping individuals, entrepreneurs, creators, and collaborators to understand that you must have a published work. You must have a published work. You have to have an identifier that will live here long after you're gone. And so Don has done that by creating this phenomenal publication that he's going to share with you here in a few moments. And that publication is going to be here long after Don goes to heaven and is sitting with Jesus. He'll have that publication here in the earth realm for someone to be able to get their families freed. So if you're open, interested, and you want to work with a stellar publishing house, then look no further. You can send me a message on Instagram and we'll go from there. Thank you so much for having me, Don. And remember, you can never have a good conversation without a great cup of coffee.
Thank you so much. So, Derek, will you please go ahead and introduce yourself to the folks and tell them about what you do housing the homeless, please?
Absolutely, absolutely. And Don, thank you so much for allowing me to share and be on your stage. So, my name is Derek Forston, guys, and to make a really long story short, we house the homeless, right? So we do that in a shared living environment. So to make another long story short, my background is social work. So for a really long time, as a social worker, I had the want to and the desire to house people, and didn't realize I was kind of in the middle of it, done. And just I tell people the light bulb kind of just came on one day. And now today I tell people that light bulb was God. It was like, Derek, wake up, man. Like, you don't only need to be a social worker. Like, if you really want to do this, how can you make a bigger impact in the housing? And nobody would teach this to me, Don, in terms of what it was. So again, I'm gonna try to skip, man, and kind of make it short. But I got into it, man, and I just jumped in. I took a leap of faith. And the greatest part about what we do, we don't have to own these properties. So a lot of people think that to start a housing program, that you have to own the property, and we don't own these properties. So God blessed it, man, to where we developed something called independent living facilities, which are essentially unlicensed group homes. It doesn't require that you own the property. There's no license that's required. So we take people from homeless to hopeful in a shared living environment. So basically that picture that you see in my bio, man, of the 2 beds in 1 room, that's kind of what it looks like. So we'll take a 4-bed, 2-bath home, and we're going to put 2 beds in each individual room, right? And again, we're going to work with social workers and case managers and taking people from homeless to hopeful, making an impact while making an income. So we do that by housing the homeless. Now, done 3 or 4 years ago, that's all we housed was the homeless, right? People that had mental health conditions. But with today's market and what everything's happening with the high rental rates and mortgages are getting so expensive, a lot of people can't afford to go out and just get their own place, right? So the shared living environment is just much more affordable for a lot of people. So that's what we do. And between me, my brother, and my entire family, man, we go all over the world teaching people, showing them exactly what this is. So, Don, I appreciate you allowing me to share it, big bro.
Listen, man. Listen, folks. This is amazing. I'm going to take just a small break from what we're doing. So I'm going to put a pin in where we are. Remember, we just talked about paying back just $3,000 of $10,000, and it cost us over $10,000 in interest to do that. But I need to put a pin in that because Derek is here. I don't know how long he can stay. I got to ask him some questions. Derek, can you answer a couple of questions for us?
Absolutely, Don. You got it, man.
Okay. As a social worker, you were actually housing the homeless then, weren't you?
Absolutely. And I was doing it from a 9-to-5 job.
Okay.
Basically 8 to 6, if you want to be real about it.
All right.
6, 7 days a week.
What happened when you actually visited some of the places you were placing your clients in?
Man, that's what kind of opened my eyes to all of this, right? So a lot of you guys in this room, I see a lot of our family here. When God put the vision in my heart today, Derek, you should be the guy on the other side of the fence instead of working this 9-to-5 job. And like many of us, we give God an excuse of why we can't do this or do that. And my excuse was, man, I'm poor, man. How can I go out and start my own place? And so quietly, man, God just whispered in my ear, Derek, man, you can rent these places and do the same thing I'm asking you to do. So because I was the social worker or the discharge planner, I knew all the addresses, Don. I knew exactly where to go. So I began to go and look to see what these places look like because I needed a starting point, Don. Nobody would teach this to me, right? And although I was the social worker, I never saw the inside of a group home. I never saw the inside of a housing program. All I did was work from behind a desk, 9 to 5, referring people to these places. And man, Don, when I went to go see some of these places, man, it broke my heart, man, to see people being housed in these conditions of like rats and roaches and filth and just all of this nastiness, right? Most of the housing programs that I went to, Don, all of the beds were on the floor. There were no bed rails, there were no sheets, there were no pillows, there were no covers. And as roaches were running in and out of these mattresses, man, it just broke my heart. And what really broke it even further was that I was the social worker sending these people here. But remember, bro, like I didn't know, right, that I was sending these people to such bad conditions. And when I found out, I was like, man, we got to change this. Like, we got to change the way homeless people are being viewed, and we got to change the way they're living.
Listen, man, I want to ask you some more questions, but it brings tears to my eyes every time I hear you talk. And I heard you say one time about one lady that you placed in a home. Her mattress was on the floor in the kitchen in front of the store. Will you tell that story and then what happened to that lady afterwards?
Absolutely, man. And again, as I tell you guys, I was the social worker, right? So I referred this young lady to this particular housing program. And guys, remember, I never saw the inside of a place. I never been, so I didn't know. My job was solely responsible for referring these people out. And y'all, when I took that visit, when God put it in my heart, said, Derek, this should be you housing these folks. I said, okay, well, let me go see where the starting point is. And done, when I went to that one house and I bumped into her, I'll just call her Sherry for today. I was like, Sherry, you live here? Done. She looked at me so gracious, like, Derek, of course I live here, man. You sent me here. And I was like, well, show me where your bed accommodations are. And guys, before I even get into that story, there was over 14 people in a 3-bedroom, 2-bath home. And done, one of the doors had a lock on the door, like a deadbolt lock. So now we're only talking a 2-bed, 2-bath with over 14 people. So you're going to be able to see real fast why this lady was sleeping in front of the kitchen stove. So as she began to turn around the corner and take me down the hall, she took me to the kitchen. I was like, well, why are we stopping here? Like, I'm headed towards the bedrooms. And done, man, she showed me a 3-inch mat that was in front of the kitchen stove. And you guys know that drawer at the bottom that most of us keep our cake pans and those muffin pans in, that we keep our certain dishes that we keep in the bottom of that stove drawer. Guys, as roaches were running in and out of that. That's where her 3-inch mat was. Everybody else in the home had dirty mattresses that were on the ground in the bedrooms. This lady's basically her housing accommodations done were in the kitchen where roaches were running all over that place. And man, she was paying $750 a month to sleep in front of the kitchen stove. And I tell people all the time, that's the straw that broke the camel's back, or however that saying goes, right? That's the one where I said, man, this is enough. That's it. I got to figure this out, right? Needless to say, as I always tell people, man, nobody wanted to teach this to me, right? This is $1 million business. This is $1 million ministry if you know what you're doing and you do it right. So that's why people didn't want to teach it to me. And man, once I figured it out, I was like, man, we got to change the way homeless people are being viewed, and we got to change the way they're being housed. So I tell people all the time, Don, I'm no genius, bro. Trust me. I barely finished high school. My wife tricked me to go to college, and by the grace of God, I finished that. But this doesn't take a degree. There's no certain certifications. If you got a big heart for God's people, just people in general, right? And you happen to like real estate, this is it. Because this allows you, Don, to combine real estate and social services together. That's all we're doing, right? And remember, I don't own most of the properties I do this from, right? So most people think you have to own the property, you have to have a license, you have to have zoning. The reason why we're able to do this with no interruption is because the only thing we provide is housing, right? We don't cook for these people, right? I don't provide transportation. I don't administer medication. I don't do any of that stuff that's required for an assisted living facility or one of your traditional group homes. But Don, back to that story, man. When I found out that that lady was sleeping on the kitchen floor, that was the day that I said, man, enough is enough. No more excuses. Because I had all the same excuses that nobody would teach this to me. Nobody wanted to show this to me. So I just took it upon myself to learn it. And a lot of people don't know this part of it. Done. It took me 2 years and I lost 60 pounds trying to figure this out. What I now basically break down to people in about 30 minutes in terms of how to do this, right? So we got rooms every Monday at 6 p.m., every Saturday at 9:45 a.m. And we actually have a pop-up room today, man. We got some crazy good news that I'm delivering today about our masterclass October 15th. So if you guys want to join us today at 1 o'clock, I got some crazy breaking news. Somebody was a super blessing to our organization and they wanted to pour into some people. So it's some crazy news going on today at 1 o'clock. But our masterclass done is as you know, we only have them twice a year. So this year is October 15th at the Crown Plaza Hotel in Orlando, Florida. So again, Don, I just really appreciate you allowing me to share it, because our sole mission, Don, I'm gonna land my plane here, right? When I figured this out after people refused to teach it to me, and y'all can hear my computer going crazy, man. I'm getting a lot of calls and messages for placement because this is all I do. But when I figured this thing out, like I wanted to be the opposite of what most people did to me. So people had the crab in the bucket mentality with me, right? When I wanted to learn this, even as the social worker, you would think they want to show me because I'm the honeypot. Most people consider me as the honeypot, Don, because I'm the guy that knew all the people, all the calls came to me, right? So, but Don, nobody wanted to show me. But when I learned it, man, I couldn't wait to turn around and show people what this was, because it changes your life. I had a prayer done and it was very simple. I said, God, you know what? I want to help people and I want to help your people. And God, I want to turn my yearly salary into my monthly salary. And I want to do that by helping.
Have mercy.
My model is this, Don. How can you lose and how can you fail by telling God you want to do his will and you want to work for his people? So I think that was the genius part of how all of this started, me just saying yes to God. And not because one thing about this ministry, Don, it is so unselfish. Money follows ministry, right? And I'm gonna say that again because I don't want that to go over nobody's head. Money follows ministry. So with what we do done, the money is already built into it. We don't have to lie about it. We don't have to cheat for it. We don't have to steal it, and we don't have to house people in these bad, terrible conditions. All you got to do is treat people with dignity and go rent a dadgum house, build relationships with social workers and case managers, and keep it going. You just keep scaling it. This is not rocket science by any means, right? And we teach this all over the world, city to city, state to state, right? But people simply come in our rooms at times, Don, and simply just listen to this and they just get started, bro. And as you know, you've referred a few people to us now that have quit their jobs to do this. And I'll let you talk about that. But again, Don, when I got this thing and God gave it to me, we wanted to be the opposite. So instead of having a crab in a bucket mentality, that whole no stingy energy thing, man, we go all over the place showing people how to do this. And most people quit their jobs, especially like here now, like here lately, like in the last 12 months. A lot of people are quitting their jobs within 90 days of meeting us, Don. And I land my plane there. God is good, man.
So y'all just gonna play around like y'all just on the big mics of all this good information.
Yo, you know I got Shay here with me today.
Come on, Shay. Come on, Shay. Listen. I got two, just one or two more questions, and then I'm gonna let you guys go. Shay, how you doing this morning?
I'm doing good. I cannot complain.
Listen, I'm trying to get you up to the stage. You probably busy doing something.
I'm sitting in front of the computer with a headphone in and the second mic's connected. So
All right.
I'm just eavesdropping.
I got you. So there, can you tell us how you met a person who was proud of what they were doing in this homeless space and how much money they were making off these people? Can you tell us just a little bit about that?
Oh, absolutely. So this same lady, or the conditions that most of you guys just heard me talk about with the rats and the roaches and all of that, this lady that I was begging to show me what this was, and thank God today that she didn't show me, right? But I was aggravated and upset that this lady wouldn't show me what this was. The same story that y'all heard me talk about with the rats and roaches and people sleeping in front of the kitchen stove paying $750 a month. This lady was making $41,000 a month, y'all. And that was the only thing she would ever show me. So when I tell people that a lot of times, Don, some people think I just say that because I heard about it. This young lady wouldn't show me what this was, and she wouldn't show me how to do it. But one day
she actually showed me how much she makes. So she took her her cell phone and she opened up her Chase app and she says, "Dear, look, I want to show you something." And done, she scrolled from page to page she kept scrolling and scrolling, and done, there was no month where she made no less than $41,000 every 28 to 31 days. And this is the same lady that was housing people, mistreating people. So done, when I saw that, I was like, man, I'm gonna be a millionaire. Because if you mean to tell me you can mistreat people, God's people, and make this kind of money, which I don't condone, I said, man, I'm finna change this whole game. So when I got in it, that's why I tell people, man, this is not rocket science. If y'all see the conditions of what she used to offer, and I got a whole webinar on it. If you guys click on my link and go to Instagram, and you can check out all of that stuff, right? But if y'all see the conditions of what she offered, which I took a lot of pictures of it because I want to have proof of what it was, and y'all see what we offered, done, all I did was turn myself into a no-brainer. So done, I want to repeat that. This lady was making $41,000 and done, I was making $28,000 a year.
Lord have mercy.
I'm going to slow it down because I talk fast, done. I'm going to slow it down because I talk a little fast. I get excited. Done, I was making $28,000 a year. And remember, I'm the guy sending all of these people, all of these referrals each and every day, each and every day, each and every day. And then one day, boom, the light bulb came on and said, Derek, why not you? Done, this lady showed me on her phone she was making $41,000 a month. Ladies and gentlemen, y'all put in the chat a number 7 if you think if you made $41,000 a month, would that change your life?
Have mercy.
Would that change your life if you guys made $41,000 every 28 to 31 days? That's what this lady was doing, y'all, mistreating people. Can you imagine what we do in terms of our numbers when you look at what we offer? Guys, we're known as a one-stop shop. When you're housed at Second Chance Housing, which is the name of my personal independent living facility program, guys, my clients and my residents don't pay like lights and water and cable and Wi-Fi and all that extra stuff. I'm a one-stop shop. They pay a one fee. And guys, we rent by the bed. So if anybody here is confused about what we do, we rent by the bed, not by the house and not by the room. We put 2 beds in each room and we take people from homeless to hopeful. And that's going to be anywhere from probably $600 to $900 per bed, depending on where you live. But done, $41,000 a month, bro, mistreating people, that broke my heart, man. And that's why we said we had to change that.
Hey, Uncle Don, listen, did he ever tell you that one day we were at the kitchen table and he was having a phone call with this young lady?
Oh, yeah.
I didn't know who she was. And I'm like, who this chick he talking to?
Okay, come on, Shay. Come on, Shay.
So listen, he said, get me a pen and paper. I got him a piece of paper and a pen. And no word of lie. She was telling him something. He started writing.
Man, I want to finish this story. Lord have mercy.
And the paper. Oh my goodness. If you want to see a Bermudian get angry,
oh Lord,
do what you did to my husband that day on that phone.
Done, this lady, like one day, done, she almost act like she was gonna kind of sort of start telling me stuff. So I was like, Shay, give me a pen and paper. Done, I tell you no lie, God is my witness. She heard the scrabble on the paper. Did. Guys, if you can imagine, like, because that day I was writing with a pencil. I don't know why Shay gave me a pencil, y'all, because if it was a pen, it would have been quiet. Shay gave me a pencil, done, and she could hear the writing. She was like, what are you doing? What are you doing? Don't write that down. Don't write that down. Just listen to me. I said, Lord, have mercy. If she's trying to hide this information from me, this must be $1 million business. This must be $1 million information. What is she trying to tell me that she don't want me to write down? Y'all know that saying, no stingy energy? She was stingy, y'all. When she heard me writing what she was saying, done, she lost it on me.
Yep. And I said, if you don't hang up that phone, we're going to have a problem.
Finish. And that day, Shay was like, Derek, man, what are you going to do? Like, you got to figure this out. You obviously, dummy, see that nobody's wanting to help you. Like, you got to figure this out, bro. You got to put your head down, put your hand to the plow, trust God, and keep it moving.
Yep.
And I did, right? Most of us know that scripture, done, write the vision and make it plain. When most of us hear that, done, most people think that's only for them.
Habakkuk 2:2.
My assignment. When that was instilled in me, write the vision and make it plain, man, that's for everybody in this room. So when God put the vision in my heart, that wasn't only for me to house the homeless and the less fortunate, to offer shared living environment for our people. That was for everybody that wanted to read this vision. They can run with it. That's why I'm telling you, Dornico, who you referred to us, has now quit his job and does this full time. How great is that?
And has partnered with other organizations.
All of that started from you, Don. He came to you for the P.I.L.L method, learning how to cut interest and cost. And in part of your conversation, like, you're so great at what you do. Not only do you help people kind of learn how to save all of this money, but one thing you dug deeper in and you asked him, what else do you want to do? What else is on your heart? Where else are you going to invest this extra money that I'm saving you through the P.I.L.L method? Lord have mercy. He told you he wanted to house the homeless. Why? Because he also was a military veteran. Ping him in the room, Shay, please ping him in the. This is Don Roon. I don't mean to take it over, but that's a powerful story. Like, Don referred him to me because what was on his heart was to house the homeless. He was also a military veteran, and I'm gonna tell part of his story because he's proud to tell it. Y'all, he admits that he was only making $24,000 a year. Y'all, that's about $500 every 2 weeks taxed. How do I know that too? Because I was making $28,000 a year, so I know the numbers. Done. He's now offering private rooms to military veterans for $850 a bed, changing the lives of people through housing. And now he has 2 independent living facilities. He's got a 4-2 and a 3-2. And if y'all know our model, the 4-2 means 8 people that I can take from homeless to hopeful, and the 3-2 means I can take 6 people from homeless to hopeful. If you guys know anything about Dayton, Ohio, they're huge on sex trafficking and on women. Dornico is saving the community when it comes to that. The 3-2 is solely dedicated to women. His 4-2, he's housing military veterans and working individuals, right? He's even housing a guy that works in the jail system. And that's what I mean by years ago, Don, we was only housing military veterans. But today, he's housing a police officer. He's got a prison guard, and all of the other populations that we're talking about, military veterans, and they just go on and on and on. But Don, that's what this ministry does, big bro. And again, just thank you so much for allowing us to share it.
Well, listen, we just need to know. Listen. Nobody has moved. Nobody has moved from this room, and folks have come in here just to hear you in the P.I.L.L method room. They got to know how to get in touch with you, man, because I know somebody's heart has been touched, and they want to know what you know so they can do what you do. How do they get a hold of you?
Absolutely. So definitely follow us. And if Shay can help me maybe put up a link or something, Don, if that's okay with you. I'm actually going to do something that actually some people may be jealous of, right? But I'm gonna just go ahead and do it.
That'll be fine with me. Put it up.
We have a masterclass October 15th, right? And we only do this twice a year. Through the grace of God, Don, and through somebody that we taught this to just here a little while ago, she always told us that she wanted to kind of bless people and be a blessing to us once she got on her feet, and we kind of proved ourselves to her that this worked. Don, it has completely changed her life. She's quit her job and she's poured into Forster Consultants, and she's sponsoring 20 people that want to come to the masterclass. So instead of our $12.97 ticket, Done, she's covered the fee for everybody, and all they have to pay is $500, right? So if you guys go to our link and you click that masterclass link, all you have to do is click the masterclass and then type in that special code that is Shay, you better help me.
Make it happen and the number 1.
Make it happen and the number 1. And all you got to tell us, Don, is whether you want salmon, chicken, and what size your t-shirt is. And we also have a vegan dish, right? So Don, it's amazing. We only do it twice a year, big bro. And instead of, again, the $12.97 ticket, it's only $500 for anybody that wanted to come.
And the powerful thing about it is we released this on
last night, right?
Monday in our room. And when we told her the response that we had gotten, before we closed that room, she originally gave us, what was it, 10?
Yep.
It was 10 tickets. Before we closed that room on Monday, we already had hit the 10 ticket mark.
Yep.
So Derek released the cat out of the bag before he even done it in his 1 o'clock room.
So the event was actually already kind of sold out. We only do a certain amount of tickets, but because of this blessing and what this lady wanted to do, because it changed her life, we actually extended the tickets. And we have the room for it because we got one of the largest rooms anyway. But other than that, Instagram, definitely follow us at Forster Consultants. On Facebook, Forster Consultants. Also, Derek Forster. Follow us there. Follow us here on Clubhouse. Also, we have rooms twice a week, every Monday 6 p.m. Eastern Standard.
I want to put that link.
Saturday
I want to put
morning.
that link up to the top. I was trying to invite your wife up, but it's not working.
I
So
think Shay's trying to do something. She said she raised her hand.
yeah, I tried to bring her up, but it's not working. So what's the what's the link?
I'm gonna put his 10K card.
Okay.
You can use his 10K card and go. I think the masterclass is on there, isn't it?
Mm-hmm.
Yeah, the masterclass. Hit the link that says masterclass.
Okay.
And at the checkout, you're gonna go for the general admission seat. At checkout, you're gonna put in that amazing coupon code. Make it happen, and the number 1.
Yep, and it's only $500. And you
okay.
get
So what's your 10K card, Derek?
10K card, Shay.
I'm gonna send it to you right.
I'm not super techie, Don, so I let Shay kind of handle all of that stuff.
That's why he done made me get on this mic and gave me headphones.
Hey, Derek and Shay, this is Coffee. I have to head in with a client. Can you guys, I've just sent a message on Instagram. If you guys could respond to that, I would appreciate it because I've got to get with my client.
Okay, absolutely.
Derek just got it. He sees it right now.
Thank you both so much.
Thank you as well. We appreciate it.
Mr. Don, I have put that link in the chat.
All right. Well, do you have a shorter one that I can? Do you have a shortened URL?
Also,
because I can't copy it.
Affiliate link for you, sir.
So yeah.
We just got to send you your affiliate link as well. So
all right.
We want you to be able to have that because I know that you spread the word a lot, right? So instead of just saying thank you, we also like to compensate folks. So we'll get you your link for that as well, especially for you and also anybody that wants it. And while Shay is getting that up too, Don, I want to say one more thing and I'll land it.
Right.
Over the years, Don, we thought that we eradicated every excuse for anybody to not to get into this, right? Because we often tell people the only barrier to getting into what we do is actually getting the real estate to put them in.
Right.
A lot of people think it's the clients or the residents is the hardest part. That's actually the easiest thing we do is getting the clients, but actually getting the real estate to put them in is the difficult part. So when we came out with the version of, man, you don't have to buy your place. You can just rent it, right? We have over 250 of these throughout 10 different states now. We're super proud of that. But what we're super proud of now, done is over about 60 days ago, God blessed us with the new vision, and it's called the HRA. And that stands for Housing Referral Agency. And this is where you're able to house the homeless, done, and you need no real estate at all. Like you don't have to buy a place. You don't have to rent a place. If you have a cell phone and an internet connection, and if you have the willingness to build relationships with people, that's all it takes. So we're showing people how to turn yourself, instead of you being Don Daniel, you're Daniel Solutions now. And now you are a referring agency. So when you get these phone calls in, instead of housing them, done, because you don't have a house, you refer them out to people that already do have these housing programs. And that's how that works.
All right, folks.
Amazing product.
I got it up there. So click on the link, save it, and get with this great program. Derek, I want to listen. This was totally unscripted. This is why we, doing live TV or doing live simulcasting. It makes it great. So Derek, we got to bring you back so that you can do an entire show on what you're doing. Let's set that up. Can we do that?
We'd love to, Don, anytime.
Shay, thank you so very much for being in here. So folks, listen, I've got.
Thank y'all so much. Hey, what's going on, Don? Don Robinson, not you, Don.
Hey, how are you?
Good. How about yourself?
I'm so proud of you guys. Blessings to both of you and your company.
Good stuff.
All right, folks, listen, we're going to finish things up here. And the reason why we stopped, we put a pin in. All right. Remember, we refinanced to try to lower our payment. What we're being taught, we start out at 7%. The experts are saying let's refinance to get down to when you get a lower interest rate. And the cost of this refinance was $10,000 on top of what we already owe. So now we're just paying back the first $10,000. And if you want to see this, you go to ice10k.com and then ice10k.com, and then you can see the links there, or go to YouTube, Facebook, Twitter, LinkedIn, and search P.I.L.L Method, and then watch us live. So watch this, folks. Cumulative principal, cumulative interest. The first $3,000 of that $10,000 we pay off in 1 year. It costs $10,400 in interest to do that. Do you see in 24 months, even at the lower interest rate by 2 points, in 24 months, we still haven't paid off the first $10,000. It's at 63.55.13, and it's already cost $20,700 in interest to pay that off. And now, folks, now we're looking at it. To pay off the first $10,000, it takes 37 months and $31,639.54 in interest to pay off the $10,000 we paid the bank to refinance this so that we can get a lower payment to get us back to the original $200,000 we had when we refinanced. So, folks, you know what I call this? How not to pay your mortgage for 3 years and keep your house, because all we did was pay back the fee. Come on. What's going on here? Listen, folks, this is what we're talking about. The P.I.L.L method is here to bring the truth of the matter. You know, things are happening all around us. And there are better ways to do everything. There are better ways to pay back your debt. There are better ways to get into real estate. There are better ways to house the homeless. There are better ways to do things. And that's what this room is all about. We want to bring you the truth of what's really going on. So how in the world can we lower the interest rate and it actually takes you longer to pay off the debt? This is why. Stop listening to the talking heads. Stop listening to the so-called experts that tell you what to do and provide you no proof. If you want to know the proof, if you want to see what's really going on here, folks, then go to ice10k.com. ice10k.com. Click on the link that says get a savings and earnings report, and then you can know what's really happening here. Okay? How can we do this? How can you know this? You can know this because people all over the country, and somebody has just look, folks. I can't show you the name, all right? But somebody's already this morning put in for their savings and earnings report. My team is going to go to work on this. They just sent it in. My team is going to go to work on this so that they can see the month, day, and year they could be debt free. Not be worried about the interest rate, but we're going to focus on managing the interest cost. Oh my goodness. I want to thank you all for being here. Meet with Derek today at 1 o'clock Eastern time. Dawn, do you have something to say about the fact that people are paying $10,000 to refi to get a lower payment, and it takes them 3 years just to pay the $10,000 back and $31,000 in interest to do it?
All I can say is don't believe the hype, Dawn. I think this was life-changing for me, and I hope they step into the light. Let me tell you something.
Come on.
All locks have now been approved. I'm waiting on the final push. So I was able to do in the last, last week? So within the last 72, let's just say a week, I have pulled off HELOCs. So over $600,000 after these homes are paid off. So I still have access and I still don't have a mortgage. So that's why it matters to pay off the debt, right? The goal is to make work optional so we can build wealth in a way that feels great to us. So Dawn, I can't wait to get you the final numbers on all these HELOCs. I'll let you know what's going on.
Listen, folks, this is what we're bringing to you. We're bringing the truth to you about how these loans work. And folks, I just showed you the numbers. If you listen, that's why we put it up on Facebook, on YouTube, on Twitter, on LinkedIn, so you can go back and watch it again and listen to it again. Some people just listen to us as you're a truck. I've heard from truck drivers, it's down, I can't watch you. But because it's on YouTube, I can listen to it as I'm driving down the road. And we just showed you the numbers. People are saying, go ahead and invest in yourself. Get that 7% interest rate. But when the interest rates drop, then refinance out of it. I just showed you an instance where it actually cost you, you'll even be in debt longer by lowering the interest rate by 1 point. if you pay, listen, by adding in your fee. And we showed you what that fee actually does to your loan. In fact, this refinance didn't cost $10,000. When you add it all up, it cost over $41,000 for the refinance. You were told 10, but nobody told you. Nobody told you it was going to cost you an extra $31,000 at 5%. Well, sit down. Well, see, that's at 5%. Let me show you what would happen if we could even. Now, we won't see 3. We probably won't ever see 3% ever again. We probably won't see that ever again. But just in case you could get 3% on the same amount, and we charge the $10,000. Now your payment is down to $885.37. Look, folks, it still takes 2 years and 3 months to pay back the $10,000 and $13,852 in interest, even at 3%. Don't you believe it? It's at 3%, because 3% really equates to, let me show you the number so you won't think I'm pulling your leg. If you get this loan at 3%, the bank wants 51% of what you borrowed in interest. And we just brought Miss Tammy to the stage. Miss Tammy, how are you doing?
How are you doing?
I'm doing well. I'm doing well. All right. Faithful supporter. Oh, my goodness.
I got you.
Listen, we appreciate you. We're getting ready to get out of here, Miss Tammy. Getting ready to get out of here. But we were talking about the 7% interest rates, why people don't have to be scared of it. If you can afford the payment, we can show you how you can do better at the higher interest rates than you can at the lower. Don't let that information scare you. Everything that you've been told in the past, not true. Not true at all. So listen, I want you to think about this one thing. I told you some things to write down. This is the last thing I want you to write down today. If by refinancing or anything that the bank offers you to save money, if you're saving money, who would have to be losing money? If you're saving money, who would have to be losing money? And if your answer is the bank, oh my gosh, you better watch out, because they're not putting themselves in a position to lose money. By lowering the interest rate, by lowering the term, by giving you something that makes you think you're saving money, you better believe on the back end, they're making a ton. And if you want to know how that, whatever you're getting ready to do financially, if you want to know if it's going to benefit you or benefit the bank, you better get a hold of P.I.L.L Method and have somebody on your side of the closing table that can help you to determine how to construct the loan, first of all, so that it's going to benefit you and not them, and then how to pay 75% less interest. You better come on board and understand what's getting ready to happen. Miss Tammy, do you have any words of wisdom for us this morning before we close out today?
Well, I just keep thinking about what I said yesterday, and what I've been telling people is, somebody may be thinking like, well, I don't even have a house, but you're a single parent. You may be a single parent, or you may be married with children, and you always wanted to bless your kids. So every year around Christmas, in between Thanksgiving and Black Friday, you go broke trying to buy them the repentive gifts of not being able to get them their first house or their first car. When in fact, what you can bless them with is an itemized play from Mr. Don with how you're going to, like, 3 months, 5 months, or whatever timeline Mr. Don tells you. This is what we're going to do. Your mom and dad, me and your dad are going to pay down your interest on your, so this brings down your loan. I don't know no child, even if they were the most hard-headed kid ever, the one you had all the problems with. I don't know no kid that wouldn't take me and my husband, our mortgage being lowered because mom and dad got the interest. Now, if mom and dad may not be in a position to run you that $1,500 every month, but what I can do, speaking from me being a single parent of twin boys, and they're 24, I always forget that they're 24. So one is married, other one is engaged, but one is married. He and his wife just had a baby. and September the 20th, like a couple of weeks ago. He and his wife just had a baby. But what I always saw myself doing for my sons was getting them their first house or investment property, or, buying them their first car. But since, one of them's like, I just want to do it for myself. Okay, go ahead. So when the other son got married, he and his wife, they bought a house. So now I'm looking at it like, I was like all in my feelings, not even realizing that it's a blessing, even if they're in a position to buy themselves a house. And just the Holy Spirit, just, like, hey, you could use Don's play and pay down their interest, because Don is telling you how, and this is the time you pay this amount of interest. So if I'm going to do that, if I'm like, okay, all year I'm going to save up, how those commercials tell you all year, just buy little things in the store. And then in November, October, you wrap it up, and those are your Christmas gifts. So all year, instead of buying the little things in the store, all year you save that money. And then Mr. Don can say, all right, let's pull the trigger on this in September, and you're going to pay down this much interest. Or if you've saved up all year and you got $5,000, you go buy the 4 or the 6 unit, and you say, okay, now the money play is, I got 1 unit that does nothing but pay down the interest of my kids' loan, of my children, the interest on their mortgage. And it may be the interest on my other son's car. Like, you're blessing them with interest payments. They may be like, what, she talking about interest payments? Why is she not blessing us with interest? Because your kids ain't going to understand. They just but what they will understand is, oh, I paid $5,000 in this from a 4 unit or a living facility. If you get with Derek, one of those units pays down the interest, and you say, okay, I'm gonna pay your interest down. They don't understand that. But what they do understand is when they say, well, no, now 6 years has been knocked off your mortgage, and they like, oh, I guess you know what she talking about. I don't know, honey. This Mr. Don dude done came up with something. I don't know. I still don't know what she mean by this. And that's how I used to listen to Mr. Don. He'd be like, the P.I.L.L method. He just be talking and expounding. I'm like, I don't understand what he mean. But he run into burning buildings for a living. So clearly he ain't out here trying to scam people. So I just listen to him based on the fact that he is helping people extinguish stuff in their lives that he will never get a benefit from. Because he can tell you all of this and how to pay down interest, and you can do it wrong and still pay down the interest and still be ready to walk out of a mortgage or car loan or anything with interest that's knocking you over the head. Because it ain't the payment, it's the interest that's kicking you in the teeth. But nobody realizes that, because they go into a car dealer and say, I just need to know my payment. I can't pay nothing but $300. And they say, okay, we got you. $300 for 192 months, we got you. And you like, yeah, I came out there with my payment. And you like, what? You are paying on the 2001 Nissan Altima for 192 months for $300. Do you know what they did?
Miss Tammy, we got to let the folks go online, but we're going to come right back here on Clubhouse in just a couple of seconds. So folks, listen, if you want to know more about what we do, go to the link up above, click on ice10k.com, get your savings and earnings report today. We're going to get our last word from Dr. Eric Thomas as we say goodbye to everybody online, but we're going to come right back here to Clubhouse to close out. My name is Don Daniel, founder of P.I.L.L Method International, and our team created the most powerful money management, wealth building, debt elimination system ever created. At our recent seminar in Nashville, Tennessee, the keynote speech was delivered by the #1 motivational speaker in the world, Dr. Eric Thomas. E.T., as he's also known, mentioned he paid off his mortgage in 4 years using the P.I.L.L Method. I invite you to watch and listen.
Listen to me, y'all. But one of his mentees took us through one of their programs, and I paid off my mortgage. But guess what happened? My marriage went to a whole nother level. And you know why? Because my wife is a security freak. And even when I blew up, my wife would be like, oh, you blew up, but how long is you gonna keep making this kind of money? I was like, I don't know, forever. She's like, you sure? Because I'm gonna keep my license as a nurse just in case you don't. So when I paid the house off, my boy was like, you ain't gotta do that, you can do this. But when I paid, it took the stress level all the way down from my wife because we no longer had a mortgage. Does that make sense? That thing that was coming every month, that was getting on her nerves, we didn't have that no more. And so she was at rest.
Did you hear that? No mortgage, no stress. If you would like to become debt and mortgage free within an average of 7 to 9 years by cutting your interest costs by up to 75%, go to PILLmethod.com and request a savings and earnings report today.